Hey, what's going on guys? Dante Trades here, and in this video I'm going to teach you how I pass my FundedNext Futures accounts easily, and this works with any firm. I'm going to go over my results and teach you guys the pro strategies and show you the exact trades and setups I use to pass so you can do this to get funded consistently yourself. Also, I'm going to talk about how to pass rhythm, tips, tricks, etc, etc. I'm a six-figure trader. If you want a 100% free futures trading course, the link to that will be in the description. Now, first, really quick before we get into this, if you want the best FundedNext Futures discount, you can use the code DTRADES and you can save 5% right now. And also as well, you can use the link in the description to get the best discount for whenever they are running. Sometimes they run their holiday specials, etc, etc. You can use the link in the description /code to always get the best discount that they're running, and it helps the channel, so appreciate that. Now really quick, let's actually go over my results here. So I'm just going to jump into the account here. Now with FundedNext Futures, they actually just don't have very much information on the back end. It actually isn't updating, but my best trade here was the one trade that actually passed the account. Was this trade was the 1,513 to actually pass the account here. You can see that my profit target was reached and the profit was reached, obviously. And again, I just passed this trade in one day. They don't really have any charts or equity curves or anything like that. So I just wanted to let you guys know that, you know, this is a real account and I did pass it. So this is my passing strategy, and I'm using rapid accounts. I'm just using rapids to pass in one day with one A+ trade. I'm not focused on trading evals for weeks. This is a waste of my time personally. And just to be 100% transparent with you guys, I did have a couple other funded accounts that I was trading for like 2 going on 3 weeks. At some point, I just realized I wasn't trading my normal strategy because I was kind of like trying to show how perfectly I can trade and trade for YouTube and whatever else. And I just realized that that was stupid, and I'm here to make money, not to have the best stats or look cool on the internet. So once I made that decision, I went from trading a couple accounts and being just like a couple $100 or halfway to the profit to just passing an account literally within hours. And again, if I would have just traded my normal strategy from the beginning, 2 to 3 weeks in, normally I probably would have had, you know, anywhere from like 3 to 5+ accounts. And again, for me, it's really not worth the time spending months and months and months trading these evals. I just don't have the patience for it personally. Once I actually do get into the funded account, I do tell you my normal strategy, etc, etc. Because again, once I actually get into the funded account, I know that, you know, these profits that I'm making, I can actually withdraw that and make actual real money with that. But you can do the strategy and trade slower with other firms. I showed you guys when I passed my TPT accounts. How do I do that as well? You know, TPT doesn't take profit trader. They don't allow you to pass in one day, but right now speed is king. On my TPT account, it took me a good 3 weeks to actually pass the account. And if you just multiply again, like 3 weeks across, let's just say 5 to 10 accounts, you're talking about like 6 months, 10 months, etc. You know, just wasting your time in evals. And again, for me, that's just absolutely ridiculous. No way I'm doing that, right? Again, I just passed the funded stage pretty fast. I just passed the challenge pretty fast. And then once I actually get into the challenge stage, then I will, you know, trade my normal strategy, because again, at that point, you're not wasting your time, in my opinion. You can actually withdraw that money. So what is my strategy and how did I pass? Me, I trade volume profile and order flow. What is volume profile? So volume profile is a tool that shows us exactly where the most trading is happening inside of the market. It lets you see the true volume and liquidity behind the markets in real time, not just random lines drawn on a chart. And then this pinpoints where institutional investors are putting money to work so that we can have those higher probability setups in trades. So the key parts of the volume profile. The first is called the point of control. This is the single most price where big players are active. So if you look at this this chart here, you see this purple line here. This is called the point of control. This is just where you see most of the price action happening here at the point of control. The price tends to be very choppy at the point of control, but just know this is an important part that you need to know about when it comes to trading the volume profile. The next thing that we need to know about when trading the volume profile is the value areas. So this green line here, this is called the value area high. This green line here that you see here, and on your volume profile, you can actually draw these things any color that you want to. I just make mine's green, but you can make yours any color that you want to. So again, this green line here, this is the value area high. When the price gets up here, it's generally expensive here when we touch the value area highs, and I'm generally looking for shorts off the value area high. And then the value area lows is exactly the opposite. So when price comes to the value area lows here, this red dotted line, we are looking for general longs off this area, right? And the last thing we want to look for on the volume profile is going to be high volume nodes. That was a little bit hard to see here, and we're going to get into it in the other examples later in the video. But when you look on the volume profile and you see like these large clusters or shelves of volume, like you can kind of see here. This is just means that there is a lot of price action here and liquidity here, and this is something that you want to pay attention to and definitely size it up within context when you're looking at your trades. And if you don't know what that means, I'm going to break it down perfectly to you. I'm just giving you an overall overview of like these concepts. And just to solidify these concepts a little bit better for you here, let's use the onion market analogy. Now imagine you go to the grocery store and there's a market of onions, right? So let's just say the $1 is the normal price that you normally expect to pay for an onion. So this is the point of control. This is the normal price again. The price of an onion is roughly about $1, right? That's what people expect to pay for an onion when they go into the grocery store. Let's just say that for this case, right? So most of the transactions occur here around the point of control. This is considered the fair value. This is where both buyers and sellers are the most active. So if we get away from $1, below $1, so this here would be the value area low. So away from $1, let's just say this represents, 10 cents or 1 penny or something like that. Then sellers are going to lose interest in selling their onions at 10 cents or 1 penny because why? It's more valuable than 10 cents or 1 penny. So there's going to be few people or much less fewer people willing to sell their onions at a discounted price of 10 cents or 1 penny. And then the price has to shoot back up into a realistic range for, buyers and sellers to kind of, take place again for those onions, right? And then above $1, let's just say right here, this represents, again, that value area high. This represents a premium or expensive. So let's say this represents like a onion for $7 or something like that, right? So if you go into a grocery store, you're probably not going to pay $7 for an onion. So what's the price have to do? It has to go back down to a realistic price to $1 or around $1 so that people can make more transactions again, right? So just know that the point of control tends to be a lot more choppy because this is seen as fair value, but when you get to value area highs, expensive, price tends to dump from there. And when you get to the value area lows, that is cheap, price tends to pump from there. There are some exceptions, but these are the general rules when it comes to the volume profile. So conclusion, point of control marks the price of greatest agreement in a fair value. So key volume profile concepts, HVNs or high volume nodes. You can see here on the screen, I just drew boxes around these high volume node areas. If you can see on the volume profile, you can see these areas that kind of like really stick out here. I drew a box around those. You see the volume profile here is low, low, and low. And then all of a sudden we have this huge spike in volume. We pay attention to these areas that have these like really big spikes and shelves in volume on the volume profile because these areas tend to be very strong reaction zones, especially when they are in confluence with multiple levels, and you can use them as stops, shields for your stops as well. We're not going to talk about that in this video very much, but just need to know that the high volume nodes are very important, right? So now I'm going to show you guys like what does all this mean, and we shape these things up in context, right? If you look at here, this is the trade that I took yesterday to actually pass the account. Now for me, what I'm looking for an A+ setups is going to be 3+ confluences. So this means like 3 levels or 3 things telling me all the same thing, that this is a good level to long off of or short off of, etc., etc. Where do I see 3 levels into this trade? Why did I see this as an A+ setup? One thing that you can see here is we had this gap level here, and price was reacting off of this gap level for quite a while all last week. So whenever I see on a higher time frame, I will mark out certain levels, like you can see here: previous day low, previous day high, CPI low, CPI high, etc., etc. These levels where price tends to react off of. I don't use these levels by themselves, but as you can see here, we had a high volume node started to form at this gap level. So we had that gap level, and then we had a high volume node liquidity starting to be forming at that gap level. So for me, that's 2 confluences. Why? Because we have a high volume node, which is 1 confluence, plus we have a higher time frame level. So a high volume node that is forming at a high time frame level, that's 2 confluences for me. And then the third confluence, if you look here, you can actually see as well for the current session value area low here. So what did I tell you guys at the value area lows? This generally represents that the price is cheap or inexpensive based off what we're seeing in the current session. And you can see here that this red dotted line, let me actually draw too many dots there, but this red dotted line here was also in confluence with that gap level and that high volume node. So we had a current session value area low, we have a high volume node, and also that was in Confluence at that higher time frame gap level. So that was 3 different things there in Confluence telling me that I was expecting to see a reaction from that level. And what do we see? That's exactly what we saw. The price came down. We held that level perfectly, and then we came up and we hit that that TP, and I passed the account, right? Again, for me, my win rate sits at around 70%, and honestly a little bit higher on my A+ setups. For me personally, I would just rather just take my A+ setups that I know work really well for me and pass the account, rather than sit around in an eval for like I said, like a couple weeks, etc., etc. And just to put it into perspective, like I said, I was trading those other 2 evals for like 2 or 3 weeks, trying to trade for the internet, trying to look all perfect and stuff so I can make this cool YouTube video. And I just realized again that that was stupid. And then going from trading from 2 to 3 weeks to I literally just made the decision last night to change my strategy to my normal strategy to being funded in like 1 hour after that, or a couple hours after that. So for me, speed is king when it comes to these things, and this is how I trade. I just wait for these A+ setups like I just showed you guys. So yeah, that's how I trade these accounts. I just wait for those A+ setups and using the volume profile and these different levels that I showed you guys. And if you didn't understand anything in that video, please drop a comment. Again, I have that 100% free futures trading course that you can get in the description, and that's pretty much it for this one. Again, you can use the link in the description to get a discount on your FundedNext Futures accounts. Always get the best discount. And yeah, that's it for this one. If you enjoyed that video, again, like, subscribe, do all that stuff, get the free course, and I'll see you guys in the next video. Take care.